You wake up, you go to work, you pay your bills, you try to save for the future, you play by the rules. But what if the entire game, the value of the money in your bank account, the interest on your mortgage, the very cost of your life, was being manipulated by a small group of unelected officials in a room you will never see? This isn't a conspiracy theory. This is the reality of our modern financial system. The most powerful force shaping your daily life isn't in the White House or Congress. It's in the marble halls of institutions like the Federal Reserve, the European Central Bank, and the Bank of England. They control the money, all of it, and they do it without a single vote from you. This is the story of how central banks took control of your wallet, your future, and the global economy. It's a story of secret meetings, financial wars, and a quiet revolution that transformed money from something you could hold into something they can create with a keystroke. By the end of this, you will never look at a dollar bill the same way again. Our story begins not with complex charts, but with a king desperate for cash. It's 1694, and England's King William III is locked in a brutal war against France. Wars are expensive, and the crown is broke. Traditional lenders, burned by the king's habit of defaulting on loans, are refusing to lend. The situation is dire. Then, a group of private bankers offers a radical solution. They will form a new institution, the Bank of England, and in return for lending the king a massive sum, they demand a breathtaking privilege, the right to print paper banknotes, the first official paper currency backed by the state's own debt. This was the birth of the modern central bank. In one stroke, money was no longer just gold and silver coins. It was a paper promise, a piece of a government's debt. The Bank of England became the king's personal ATM and the guardian of the nation's financial soul. The unspoken lesson was seared into history: control the flow of credit, and you don't just influence the state, you become the state. This model of private capital funding public ambition became a blueprint for power, copied across Europe, financing empires and industrial revolutions, forever tying the fate of nations to the decisions of bankers. The true test of this new power arrived with the industrial-scale slaughter of World War I. The cost of the war was so astronomical that no nation could pay for it with taxes. So, the central banks stepped in. They turned on the printing presses, creating money out of thin air to keep the guns firing and the troops fed. To do this, they had to sever the ancient anchor of money, the gold standard. Currencies were set adrift. The result was catastrophic inflation that ripped through Europe, but nowhere more savagely than in Germany. The Reichsbank, under intense political pressure, printed German marks with such abandon that they became literal wallpaper. People carried wheelbarrows of cash to buy a loaf of bread. Lifetimes of savings were wiped out overnight, paving the way for social collapse and the rise of extremism. It was the most infamous example of a central bank destroying an economy, and it revealed a terrifying truth. These institutions were now indispensable, whether for stability or for ruin. While Europe burned, America watched and learned. The U.S. financial system was a chaotic mess of thousands of banks issuing their own notes, leading to frequent, devastating panics. The Panic of 1907 was so severe that it wasn't the government that stepped in to save the day. It was a private banker, J.P. Morgan. From his library, he literally locked the most powerful financiers in New York inside and forced them to pony up the cash to stop the collapse. The U.S. government was powerless, humiliated that the fate of the nation's economy rested on one man. The response was the creation of America's own central bank, but its birth was shrouded in secrecy. In 1910, a clandestine meeting was held on Jekyll Island, Georgia, a secret gathering of powerful bankers and politicians who drafted the blueprint for the Federal Reserve System. In 1913, the Fed was born, sold to the public as a way to stabilize the economy and prevent panics. But its true nature was revealed in its design, independent from democratic oversight, yet deeply, intimately connected to the very Wall Street banks it was meant to regulate. It was given the ultimate powers to issue the U.S. dollar, to set interest rates for the entire economy, and to act as a limitless lender in times of crisis. A new permanent financial engine had been installed at the heart of America. For decades, the system held a fragile global order together. In 1944, as World War II raged, the victors met at Bretton Woods to design a new financial world order. The U.S. dollar, backed by the vast gold reserves at Fort Knox, was crowned the king of global currencies. Every other currency was pegged to the dollar. It was a system built on a single promise, that America was good for it, that any foreign government could, at any time, exchange their dollars for solid gold. For a while, it worked. It created an era of unprecedented stability and growth. But then came the 1960s, the Vietnam War, and massive domestic spending programs. The U.S. was printing more dollars than it had gold to back them. France and other nations, growing suspicious, began to call America's bluff, sending their dollars across the ocean and demanding gold in return. The U.S. gold reserves began to drain away. President Richard Nixon faced an impossible choice: admit the U.S. was broke or break the system. On August 15, 1971, in a shocking address to the nation, he chose the latter. He slammed shut the gold window. The dollar, and by extension every major currency in the world, was now a pure fiat currency. It was money backed by nothing but government decree and, ultimately, the power of the central bank that issued it. The age of tangible value was over. The age of pure trust had begun. This was the moment central banks were truly unleashed. Without the golden anchor, they had unlimited flexibility. They could create money at will, and they did. In the 1980s, Fed Chairman Paul Volcker demonstrated this power with brutal clarity. To strangle a vicious inflation, he jacked up interest rates to nearly 20%. The economy screamed. Businesses collapsed. Unemployment soared. It was a deliberate, calculated recession designed to wring inflation out of the system. It worked, but the message was clear. The Fed could and would inflict massive pain on Main Street to achieve its goals for Wall Street. But the real paradigm shift came in 2008, when the global financial system, bloated on toxic debt, imploded. Central banks didn't just lower interest rates. They reached for a tool from the Great Depression era, one used on a scale never before imagined: quantitative easing, QE. It sounds technical, boring, but its reality is staggering. The Federal Reserve, and later the ECB and Bank of Japan, began creating trillions of dollars, euros, and yen out of nothing. With a few keystrokes, they conjured digital money to buy up the bad debts from the banks that caused the crisis. It was the greatest bailout in human history. For the banks, it was a miracle. For ordinary people, it was a silent theft. This newly created money flooded into stock and real estate markets, inflating massive asset bubbles that made the rich unimaginably richer, while wages for the average worker stagnated and savers were punished with near-zero interest rates. The system was saved, but the social contract was shattered. Then, in 2020, the pandemic hit, and the printing presses went into hyperdrive. The response was a tidal wave of money that dwarfed 2008. Stimulus checks, corporate bailouts, small business loans, trillions upon trillions were created from nothing. The balance sheets of major central banks exploded, ballooning to figures so large they become meaningless to the human brain. $7 trillion, $8 trillion, $9 trillion. They were playing God with the global economy. The justification was always the same: emergency, stability, preventing a total collapse. But the consequences are only now becoming clear. The inflation we see today isn't some mysterious force of nature. It is the direct, predictable result of this monetary explosion. It is the bill coming due. Every time central banks intervene, they make the system more addicted, more fragile, more dependent on the next rescue. Governments run up record deficits, assuming the central bank will keep the cost of borrowing cheap. Wall Street takes ever riskier bets. Confident in the Fed, put the belief that the Fed will always step in to save them from their own greed. We are living in a grand experiment, one where the very definition of money has been rewritten in binary code on a central bank server. So, what does this mean for you, right now, today? It means the price of your groceries, the interest rate on your car loan, the value of your 401k, and the stability of your job are all being actively managed by a committee of PhDs UVA never met. When they decide to fight inflation by raising rates, your mortgage payment can double. When they decide to stimulate, your life savings slowly erode through inflation. They pick winners and losers on a macroeconomic scale. They are the ultimate power brokers, operating in a world of technical jargon that disguises their immense power over your life. This isn't about left versus right. This is about the most profound concentration of economic power in human history, and it exists entirely outside the democratic process. The haunting question is no longer if this system will face its ultimate test, but when. Every financial architecture in history, the Bank of England, the Reichsbank, the Bretton Woods system, has eventually reached a breaking point. The illusion of permanence always cracks. The only real resilience lies in what central banks cannot create with a keystroke: intangible skills. In productive assets, in things of real, enduring value. The secret isn't really a secret anymore. It's playing out in every inflation report, every market tremor, every anxious glance at a bank statement. The people we never elected control the money we cannot live without. And that is the single most important fact of our economic lives. If this reality shift has made you see the world differently, do us a favor and hit that subscribe button. We dig deep to uncover the forces that truly shape our world. The question we're left with is a chilling one. In a world run on trust, what happens when the trust runs out?